time to go inside out on Apple and the jaw-dropping product launch this afternoon. It kicks off at 1 p.m. Eastern Time. Paul Powers, CEO of Vizna, is with us, and we're hearing bits and pieces of what we may expect from today. What are you looking forward to?
Well, this is a big moment for Apple, and honestly, I'm either going to sell all of my Apple shares or I'm going to double my holding in Apple today after the announcement. What I care about is whether or not they're serious about AI. There's been a lot of hype, there's been a lot of discussion about AI, but this is the make or break moment. Either they show that they are serious about AI, and AI is an essential and exclusive feature of the new, the new iPhone coming out, or it's not, right? And you can only innovate so much on the hardware front. I mean, at the end of the day, you're talking about a glass rectangle, right? So if they're just going to talk about hardware specs, I don't think that's going to sell. But if they talk about AI and there's a reason to upgrade to this new phone, I think this is a big breakout moment for Apple.
I can't believe what you said. You're either going to sell all your shares or double down. And yep. I think most people on Wall Street don't expect much when it comes to AI or a super cycle of any sort, in which case you may be selling.
I might be. Look, at the end of the day, AI is transforming everything right now. It's moving at an extremely fast pace. Apple doesn't have time to sit around and do a regular upgrade to its phone or any of its hardware. It has to actually show that it's serious about AI, that it's been taking AI seriously, and that there is a reason to upgrade to these new devices. Right now, the average cycle for upgrading your iPhone is 3 to 4 years. They need to get back to 2 to 3 years. And the only way to do that is to have a real reason to upgrade your phone. And a way to do that is to have AI capabilities on the new phone that aren't available on previous phones. And if they do that, then you're going to see a massive increase in iPhone purchases. If they don't, you're not going to see it. You're also going to have a massive increase opportunity if people, not just in the hardware sales, but in the software sales as well. If there's powerful AI, look at Google, look at Samsung, look at Huawei. They're all way more aggressive talking about AI. But this event is Apple's opportunity to show up and say, look, we're not just talking about AI, we're executing on AI. If they don't do that, they're going to be obsolete in a few years.
I mean, what about some of the cool features? We're going to have new AirPods. I think they may even have some hearing assist or translating languages. Yep. There's going to be several new watches. Not good enough?
That's all great, but if Apple ends up being an AirPod focused company, there's only so much profit you can make off AirPods. The phones are where it's at. The software is where it's at, right? And if people don't end up buying iPhones and they don't buy into the Apple ecosystem, all bets are off. I mean, Apple can only become so profitable if they rely on AirPods or watches to run their business.
And in the big picture, how about, we saw that the price point, I saw that the Pro and Pro Max may go up $50 to $100. Of course, we have tariffs, maybe some headwinds there, do you think?
Yeah, and in a way, Apple needs to do that, right? I mean, there's a couple of ways for Apple to expand their margins. One is just increasing prices, increasing the floor, and that's a massive way for them to increase in the short term how much profit they have without necessarily having to increase unit sales. But the best approach would be to increase unit sales. And for that, you got to increase the cycle or lower the cycle time between phones. And that's why I'm looking for an AI forward release. And specifically what I'm looking for isn't just the word AI, right? I'm looking for on-device AI that's specific and exclusive to the new iPhone. If they have that, I think they're going to see a massive increase in sales, and they're going to see much more buy-in to the Apple ecosystem. If they don't have that, I'm not personally going to understand why someone would upgrade from the iPhone, from the 16 to the 17, or even the 15 to the 17. Personally, I won't see that. And I think that's going to spell trouble for Apple in the near to medium term future. So I personally would be selling if we don't see some sort of on-device or device-specific AI features coming out in this release.
I mean, they did talk about faster charging, and people may like that a lot. If it's really much faster, if it's twice as fast, maybe you would upgrade to the 17. However, the AI game, it's been damp over there. They've been slow to really be competitive in the AI features. What would you have liked to have seen from Apple at this point?
I'd like to see that they're a leader, or at least competing to be a leader in the AI space, and they've been talking about that a lot more recently. And I've been more bullish on Apple in the past quarter than I was the quarter before. But I mean, personally, just saying that your device is going to charge a bit faster, or it's going to be made out of titanium versus aluminum, or yeah, we'll have better AirPods, that's not a reason to upgrade to the new iPhone. And frankly, there's a growing, compelling case to switch from Apple over to Google or Samsung, or one of the platforms that's taking AI more seriously. When you have game-changing capabilities on one platform that don't even exist on the other, it becomes harder and harder to explain why you're staying on the Apple platform. So I think that Apple, now there's a play that Apple can make here, which I think it would be the smartest thing. What I'm hoping they're going to do is say, hey, we're going to have an on-device AI capability that's going to be off the cloud, right? So it's going to be more tailored to you, and it's going to be more private, more secure, right? If they do that, that's a competitive differentiator that would personally make me more interested in upgrading to the iPhone 17. And I think a lot of people, especially if you're a government contractor or if you work in a secure industry, you're gonna look for that capability. If they do that, I think their sales are going to skyrocket. And so that's what I'm personally looking for here.
That actually makes a lot of sense. I mean, that's why people love their BlackBerries so much when you talk about the secure part of things. And now we fast forward to everything that's on the cloud. If you could have it more on the device, that does show privacy, and your proprietary information stays with you. Paul Powers, CEO of Visna, he may be buying, he may be selling over the next 24. We should talk to you tomorrow. All right, Paul, thank you. Tom White, host of Fast Market, here with me now. Tom, great to see you. Pretty tough words here from Paul. Were you surprised to hear him even say that? You have a couple of example trades for us.
No, I like hearing comments like that. He's a trader at heart, and that's what I am. So I look at it that way. I think if you take a look at when they release products, Nicole, and they have a new model, like they're coming out with this thinner, lighter model, they typically do a lot better post that announcement. Typically when there's just maybe some software updates, maybe some small changes, we don't see a lot of positivity. So I looked at this a couple different ways going into this event. Implied volatility levels are really low in there going into the product release today. The IV percentile rank about 13%. So we're in the bottom 85th percentile of where we've seen implied volatility levels over the last 52 weeks. So that opens up opportunities for directionally biased verticals. And the one that I'm going to look at here isn't basically focused mostly on this event. It's a longer duration. So I went out to the October monthly option. So 38 days to expiration on this position, where I'm going to buy a directionally bullish call vertical where I can offset some of the costs on the bullish side of this position. So going out to that October 17th monthly options, we're going to buy the slightly in the money 235 strike call. It's got the higher delta, reacts more like the stock. And then against that, we're going to sell the 250 strike call. That offsets some of the costs on the bullish purchase of the 235 strike call. So a bullish $15 white call vertical. You're going to pay roughly about a $6.50 debit. Maybe it might be about $6.20 right now. The stock has pulled back a little bit. But the debit you pay is going to be your risk. So if you pay $650 at risk, that can expand to $15 if it gets up above 250 over the next 38 days. The break even on this one, if you pay that $650 debit, $241.50 over the next basically 6 weeks. That's only about 1.5% above the current share price. So you don't need a monster move. But I think the key with this type of strategy, besides offsetting some of the initial costs on the making it a vertical as opposed to just buying the 235 call outright, is that it gives you a lot of flexibility as far as when you want to get out of this position, when you want to manage this position. So if you don't get that initial move after the product release, then you can wait, right? You got 38 days. But if you do get that move post earnings where the stock maybe jumps above 240, up above 245, and the price of this vertical starts to expand, that allows you to maybe close a portion or all of your position ahead of that earnings over the next 38 days. But this might be the way to play it in a low volatility environment.
Understood. I mean, look, at this point now, Apple's had a wild chart, from 260 down to 169. Now it's at 236, and I saw that Wedbush has a 270 target. Final thoughts, I think, in your two trades here?
Yeah, I can give you the other one if we got time for it, Nicole. Yeah, so this one's a little bit more neutral to bearish. On this example trade where it's a shorter duration position also. So I went out to the September 19th monthly options that expire in just 10 days. So you'll have some time on this one also, but not as much. Where I'm going to sell in neutral to bearish call vertical to the upside. That way, even if I'm wrong and the stock goes higher, as long as it stays below my break even, I can be profitable on this trade. And if the stock kind of stays where it is or falls, I can be profitable. So going out to that September 19th monthly options, we're going to sell the 242.5 strike call. That's out of the money to the upside by about $5. And then against it, because we want to stay risk defined into this event risk, we're going to buy the 247.5 strike call. So a bearish, neutral to bearish, $5 wide short call vertical. You're going to collect roughly about $1.10 credit on that. Might be closer to $1 right now. But if you collect that $1.10 credit, that's what you can make, $110 per spread with $390 at risk. But it takes your break even all the way up to 243.60 to the upside. That's over 2.5% above the current share price in there on this one. So it's a little bit more conservative. It flips the risk reward profile where you're risking more to make more or to make less, but it gives you a better probability of success.
All right, Tom White, great to see you, and thank you for those example trades always, every day here on Morning Trade Live. Tom, thank you.